In this video, I'm going to be giving you the top 5 tips for trading binary options, and these tips will help you no matter if you're a beginner, intermediate, or even an experienced trader. I can guarantee you these tips will give you some good insight to help you become a much better trader. But before we get straight into the video, make sure you smash a like on the video and subscribe to the channel if you are new. Otherwise, let's hop straight into the video. So we're going to start off with tip number 1, and that is risk management. Now, what do I mean by risk management? I'm talking about managing and protecting your capital, because if you do not have a risk management structure in place, you could consider that gambling, and you may as well just take your money, go off to the casino and drop it in some slots. I mean, there are so many risk management structures that you can make use of, and at the end of the day, you can manage your capital in whichever way that you would like to. But I do have some examples of ideal risk management structures that you can make use of. So the first example is for traders with an account worth more than $100. Now this structure involves risking only 1 to 3% of your total capital. In other words, let's just say for example your account is worth $100 on the dot. You will only be risking 1 to 3% of that $100. So you will only be opening positions worth $1 to $3. Now, this risk management structure applies to anyone with an account worth more than $100. All you have to do is calculate 1 to 3% of your entire capital, and this will give you a better idea of the value of positions that you should be opening based on your capital amount. Moving on to example number 2, and that is for traders with an account smaller than $100. Now, if you're a trader with an account smaller than $100, I highly recommend that you only risk 10 to 20% of your entire capital. So let's just say, for example, your total capital is $50. You only want to be risking 10 to 20% of that $50. So in other words, you'll only be opening positions worth $5 to $10, and that is based on this risk management structure. So basically, all you have to do is calculate 10 to 20% of your entire capital, and this applies to any trader with an account smaller than $100. But please remember guys, the market can be unpredictable and extremely volatile at times, and risk management is there to conserve and protect your capital at all costs. Moving on to tip number 2. Have you ever heard of OTC? If you're a binary options trader, you'll know exactly what I'm talking about. And if you had to ask me, OTC is something that you want to stay very far away from. Now, OTC is a transaction that takes place between two parties, usually the broker and an anonymous dealer, without the supervision of a centralized exchange. So now that you understand what over-the-counter is, you've also got something called exchange traded. Now, exchange traded is a transaction that takes place on a centralized exchange, and the centralized exchange acts as a middleman between the dealer and the broker. So you will find exchange traded pairs are far more popular and favored by traders. Now look, don't get me wrong, trading OTC does have some great benefits. You can trade OTC pairs 24/7, 7 days a week, and you'll find that OTC pairs usually offer the highest ROI of up to 92%. But have you ever wondered why? OTC is where these brokers really make their money. You see, although OTC has some great benefits, it's far more riskier and dangerous than you think. The problem with trading OTC pairs is there's no centralized exchange involved, it's just the broker and the dealer. So there's all sorts of hidden fees, and the prices are always being manipulated in favor of the broker. So overall, OTC is extremely dodgy and unbelievably risky to trade, and you just want to stay away from it completely. So in order to protect you and your capital, you want to stick to exchange traded pairs at all times, no matter what. Now, if you don't know what an exchange traded pair is, I'm going to go ahead and show you guys real quick. Now, an exchange traded pair applies to currencies, commodities, stocks, and even indices. But I'm just going to go ahead and show you guys an example of an exchange traded currency pair. So we'll go for Swiss franc to Japanese yen, why not? Now, why is this an exchange traded currency pair? Because it is regulated by a centralized exchange. So now you guys know the difference between OTC and exchange traded pairs. And at the end of the day, I'd highly advise you guys to stay away from OTC pairs, be safe, be smart, stick to exchange traded pairs only. Moving on to tip number 3, and that is find a strategy and stick to it. Look, I'm going to keep tip number 3 short and sweet. Ideally, you're looking for a strategy that you understand, a strategy that works for you, and you want to stick to that strategy. Constantly jumping around from strategy to strategy is not the way to go. You want to find a strategy with a good win rate that will most importantly make you money. Now, if you've not yet found a strategy that works for you, I'm going to go ahead and throw 2 videos up on screen right here. The one on the left hand side is a moving average crossover strategy, and the one on the right hand side is a SUPERTREND strategy. The link will be in the description to both those videos, so go check them out, and you never know, one of those strategies might work for you. So all I'm going to say is, guys, if you're constantly jumping around changing your strategy, you will not become a successful trader. You want to find your feet, you want to find some consistency. Yes, you will take some losses along the way, but that is part of trading. Just remember that. Moving on to tip number 4, only trade in session. Now, a trading session is when securities or pairs are traded during peak hours of the day. You've obviously got multiple trading sessions, and they will vary on the time zone and the hours throughout the day. I just thought that I'd inform you guys that I do have a video where I go into depth about trading sessions, and I highly recommend that you guys go and check that video out. The link will be in the description below to that video. So what you're going to want to do is head over to tradingview.com. Here you want to open any chart of your choice, and once you've done that, you want to head over to the indicators icon. Here you're going to type in kill zones, and you're going to select the one by Oscar VS and add it to your chart. So once you've added the kill zones indicator to your chart, it should look something like this. You'll see 3 color panes, you'll see a red pane, a yellow pane, and a white pane. Now, you'll find that each color pane represents a different session. You'll find that the red pane represents Tokyo session, which is traded between 11 p.m. and 7 a.m. Universal Time. The yellow pane represents London session, which is traded between 7 a.m. and 4 p.m. Universal Time. And the white pane represents New York session, which is traded between 12 p.m. and 10 p.m. Universal Time. So please just keep in mind that these sessions will vary on your time zone. So you'll find during these sessions, there's far more trading opportunities due to more liquidity being traded during these hours. I just want to give you guys a little bit of advice here. So during these sessions, there are specific securities that you want to be trading, because during these trading sessions, there's specific securities that these traders find appealing. Therefore, there's more volume and more volatility. So during Tokyo session, there's specific securities that you want to be focusing on. For example, currency pairs like the Australian dollar, the Japanese yen, and the New Zealand dollar. During London session, you want to be focusing on currencies like the Great British Pound, the Euro, and the Swiss franc. And during New York session, you want to be focusing on currencies like the US dollar and the Canadian dollar. So just keep in mind that trading in session will provide you with an abundance of opportunities in the market. And I can tell you right now, I guarantee you 100% that trading in session will make you a far better trader. And last but not least, tip number 5, 2 to 3 trades per day is more than enough. Again, I'm just going to keep this tip short and sweet. You don't have to open 100 trades per day to become a successful trader. 2 to 3 trades per day is more than enough. I'm sure most of you have heard the saying, less is more. And when it comes to trading, this saying is extremely relevant. If you've made 2 successful trades for the day, walk away, you've made your profit, come back again tomorrow. You could also look at it from a different point of view. If you've made 2 losses for the day, walk away, come back again tomorrow. You've only made 2 losses. It's not like you've lost 50 trades. One thing I will tell you guys, and this is coming from experience, is never chase your losses because it always ends badly. Less is more, keep it simple. 2 to 3 trades per day is more than enough. And those are the top 5 tips for trading binary options. I hope you guys found this video insightful. I hope you learned something new today, and if you did, go ahead, subscribe, turn that notification bell on, and smash a like on the video if you did enjoy, and I will see you in the next one.